Hello, guys. Good evening to everyone. This is precisely 7:44 my time, which is 60 minutes to 8 p.m. Nigeria time, GMT plus one. Like I promised everyone a few that I was going to make a video for the open price. Okay, here's a short video on how to use your open price. In Forex, we have different types of open price. We have Monday open price, Sunday open price, through the open price, midnight open price. Each of them, I like to represent them with an initial. For Sunday open price, I represent it with SOP, which is SOP. For Monday open price, I use MOP MOP. For through the open price, I use TOP top. For midnight open price, I use MOP MOP. So, guys, I'm going to be showing you just a little detail on how the open price work with the power of three. And I'll start by showing you on my screen, I have the USD card. And this USD card, we can clearly see a market maker buy model. And the targets for this particular trade will be this high, where we have the magnet, where we have the resting liquidity above that high. We have resting liquidity above that high. So this is the USD card, and we are currently at the buy curve of the USD card. So last Sunday, we have our opening price at this. This is our previous week open price. That's previous Sunday week open price. That is where we have this gray line. Now, a lot of persons will be wondering, what is the essence of Sunday open price? Now, there's a lot of benefit to Sunday open price because it set the tone for the week. It set the tone for the week. So that is our Sunday open price. I'm going to go ahead and label it Sunday open price for the previous week. So I am not your ideal YouTube teacher. I'm just trying to share a little bit of the knowledge I have in respect to open price, guys. So just, make do whatever you can do with this video, all right? Now, the black lines you see on the chart, the horizontal lines, are the session breaks. When I mean session break, through the session breaks, a new beginning of the forest open, the new beginning of the forest of a new session, right? The blue lines you see on the chart is an indicator I use. An indicator is called Forest Midnight Open. I use it as a way to just easily identify my midnight open price. So when I go to my chart, I can clearly see my open price just looking at me, and I know how to work around it. So you can go to your indicator settings, right? Then you just type in midnight open. I have it under my favorite. You can see it. I favorite it on my favorite indicator. So you can just type Forest Midnight Open. It will pop up. Then you just add it to your chart. Now this was our previous Sunday open price, right? So now let's start from the previous week. What price did? Now if you look at our previous week, we have our open price just at this spot, like I said. We see what happened. Price rallied. We saw an accumulation around the open price. First of all, you want to look for accumulation. Before the close of market, we saw an accumulation, right? And we all know, what do we have resting above an accumulation? Liquidity. What do we have resting below an accumulation? Liquidity. Right? So if we have accumulation and we have liquidity resting on the buy side and the sell side of an accumulation, either a range structural accumulation or the sideways accumulation, meaning they would likely take the accumulation not in the line of the direction they want to move price to first. What did I just say? They would likely take the accumulation not in line with the direction they intend to move price to first. The market makers will likely take the accumulation not in their intending direction. Yes. How is that so? Now, if they're intending to go for a sell intraday and there's an AMD around the open price, what will happen? If there's an AMD around the open price, the best thing for them to do is to cause a Judas swing. Make a Judas swing. Now, that Judas swing is to what? Throw off traders. Throw off traders and put them on the edge to start buying. But remember, you that is a smart money trader, you want to look for accumulation. So when there's an accumulation, they will take out liquidity resting above. If they are going to sell, they will take out liquidity resting above the zone of the accumulation. If they are going for buys, they will run the liquidity resting on the sell side first before they go on the buys. Now we can clearly see this accumulation right here. Accumulation. We can clearly see this accumulation right there. What happened? They run buy stops. They run buy stops. You can see how they run buy stops right here. They run buy stops. After they run buy stops, what happened? That is a Judas swing up above the midnight open price. Now, guys, watch very carefully. Watch very carefully. They run buy stops above our Sunday open price. They run buy stops above our Sunday open price. Now, not all the time you look for other blocks. Sometimes you just look at price action. What are they trying to say? What is smart money doing? What are they doing? What are they doing around the open price? Here we have our open price. We have our open price right here. Right? We have our open price right there, guys. And we can clearly see our midnight open for that day as well, which is around our Sunday open price. This is our midnight open price. I'm going to make it uphill. So this is our midnight open price. So this is our midnight open price. We saw how price accumulates around the open price. We saw the accumulation. That's our power of 3. Accumulation, right? Now we see the accumulation. Creating liquidity on the buy and the sell side. Right? Then what happened? They drove price above the buy side, taking buy side liquidity. They drove price above. They drove price above the buy side, taking buy side liquidity. They drove price above the buy side, taking buy side liquidity. Now, this is our sell side zone, and this is our buy side zone. Right? They drove price above the buy side, just exactly what we have above here. Now they took out buy side liquidity and they drove price below. This is our open price. Price was driven above open price, accumulation around the open price, manipulation above the open price, and distribution just at the right time on Sunday. Then when price was driven down on Sunday, we see how price ran down on Sunday, targeting where? That is, you have to look at where is smart money targeting. Now they have this low in sight. What is resting below this low? This was previous week Friday and previous week Thursday low. Definitely liquidity. They know we have buyers that have their stop losses resting below there. We have seen how price accumulate around open price, manipulate above and distribute, right? Now we have price running down, targeting this low. That's where we have resting liquidity. Targeting that low, that's where we have resting what? Liquidity. Then the next day, which was on a Tuesday, this was Sunday stroke Monday. This was Sunday stroke Monday, right? Then we have Tuesday. Tuesday, this is our open price, guys. And we have this as our open price on Tuesday. This was our midnight open price. Now, you might be wondering, where is this accumulation coming from? The accumulation is coming from your Asian range. Every single day we have our Asian range, right? Now, this is our midnight open. We have price driving down on Monday and closing. No, traded open high, trade down, then close just slightly above the close of the market. See, price traded down and close like this. Now, on Tuesday, when we have the market open, we have what they call the true day open price. What's the true day open price? The true day open price is the price at which the Asian market session opens the next day. So this is the true day open price. I will show you guys on the current real time true day open price. I have something that usually just keep it marked up for me. Now this is our true day open price, which is slightly above our midnight open price. Right? That's our true day open price, guys. It's just slightly above our midnight open price. Then you want to see what's going to happen. And we can see for this is Monday, this was Tuesday, and this was Wednesday. For Tuesday, we have this Asian range. You can see this accumulation. And can you see that? You can see the accumulation just by what? The open price. Accumulation. We see, remember what I said earlier, guys, that I talked about if price is making an accumulation around the open price, if you're having a bullish day, you might want to see them run sell stops below your open price. Then, you know, that was how I took my Euro USD the other day. That was on Thursday last week. You might want to look for them running sell stop below the open price before you have a bullish day. Now we see the accumulation. This is Asian open. We see the accumulation around the open price. Remember what I said? We have liquidity resting above the open price. We have liquidity resting above the open price. Remember that, guys. I said so when I was explaining the Sunday session. We have liquidity resting below the open price. That's when we have accumulation around the open price. We have liquidity resting above the accumulation. We have liquidity resting below the accumulation. Right? So if we are looking for a bullish intraday, you may want to wait and see sell stop below the accumulation run. You want to see smart money take out liquidity resting below the accumulation. And now let's see how many people taking out below the accumulation. 9 pips. So this accumulation, you just have to wake up in the morning, look for your Asian range. You box your accumulation. You wait for smart money to what? Drive price below the accumulation. Now, from what we can see, Just slightly below the accumulation, we have this gap right here, and we have this other block. They can drive price to even a block that has even been previously mitigated. What we're just focusing on is the power of 3. What did I say? The power of 3. So you just wait for price to give you that very classic entry. We see the accumulation around the midnight open and the true day open price. We see the rally down to take out liquidity first. Take note, they rally down below the accumulation to take out sell stops. What happened? They pump price above because we're having a bullish intraday. They took out sell stop and they move price above. So if you are taking this trade right here, you would have cut after the accumulation, manipulate below the open price, then you would have cut this to this fair value gap. You would have cut this 50 pip. Very easy, clean trade. Now you need to know your intraday price action before you can actually achieve this. You need to know your intraday, classic intraday price action. Now, this is our range. 1, 10, accumulation, accumulation, sell stops was run, manipulation to the downside, then distribution. So guys, this is a classic power of 3. See it playing out around the open price. ICT will always talk about the open price, around the midnight open price. Classic power of 3. The same thing that played out on Monday for a bearish intraday played out today for a bullish intraday. We see the accumulation, which is this range, manipulation below the open price, distribution above the open price. Let's look at what Wednesday has if we're going to have the same classic power of 3. Classic power of 3, right? The accumulation, the manipulation, the distribution. Now, price accumulates, manipulate down, and distribute up into this zone. It was very clean. You can see how we had this clean sell setup. It was really clean. Now you might be wondering how are you supposed to know where to get the sell setup from? Now we saw that this was the last order block that caused the break of the structure. That was the last order block that caused the break of this what demand zone that was taken out. That demand zone that was taken out, the other block, the 30 minutes other block was actually the facilitator of this move, right? Now we go to Wednesday. We've done Monday, we've done Tuesday. Now we're going to go to Wednesday, guys. Now this is our new truly open Wednesday. We can see that we have price, truly open was right here. That is high. Is our truly open? True day open price. Remember, I said true day open price is the beginning of a new trading session. That's the new trading session, 10:30 a.m. my time. That's a true day open price, guys. Then we have this as our what? Midnight open price. Guys, if you just stick to just this open price, you'll get fairly 20 to 30, 40 pips every single day. If not every single day, at most tries in a week, you could get your clean setup with ease without, if you don't even have any setup for the day, just wait and see what price will do around the open price. It's going to help you, clear a lot of things that you have been struggling with in Forex. Now, guys, we see the accumulation around the open price. See the accumulation around the open price, right? This is our true day. We see the AMD, right? We see price took out the liquidity resting above the accumulation. And we can clearly see we have a break of structure below the zone. Guys, we have a clean break of structure right here. And what was the facilitator of that break of structure? This candle right here was the facilitator. So if I was to refine, and that area was where midnight open. Midnight open. Now, sometimes midnight open, Sunday open, Tuesday open can serve as an other block to, bounce prices off when price is going for a retest. Now we can see in that zone, if I want to use the other block that actually facilitate the break of this structure around the 30 minutes, this bullish candle, it's the bearish other block. If I want to use that, I'll just use the 50%, my stops above the high. I would have gotten a clean, just almost a clean sniper trade. Just almost a clean sniper trade. And I would have been targeting. Where should I target? I'll target this low or target something lower or something nice. If I had a target, I would have been targeting this low, because we see that price was coming for this, and price was also coming for this. I would not want to be that greedy because I don't know price intention. I would have just clearly target this low, because I see this low as an inducement for this POI. Actually was having a sentiment around this zone. So I would have targeted this low for my what take profit. And that would have given me with ease from where I entered the 50% down to this low. I would have had a clean 70 pips, guys, a very clean 70 pips, right? So if you're driving it below, you want to be, be that trader that demands more from price, because price has given you an opportunity to be having close to 100 and something pips. That's it. That's for Wednesday, guys. So we can see the open price still played out around our zone on Wednesday. The accumulation, the manipulation, the distribution. So guys, that's for Wednesday. Then look at Thursday. We see our open price, right? Thursday, we see our open price. This is our true day open. We see the accumulation, manipulation above the open price. This is our midnight open price. Now we see that intraday Wednesday has already showed that we are fully bearish. Now we just have to run the template for a bearish week. Price just rally a little bit above the open price. How many pips? Let's see that, guys. Classic 7-8 pips. Run above the open price. What happened? We just saw this distribution. That was for Thursday. Then on Friday, we see what happened. This is our open price, midnight open price on Friday, right? We didn't really have much Thursday and Friday because of the high volume that was already distributed on Wednesday. So we have more of a stagnant price movement, more of a consolidating movement. Price was just draggy because a lot of volume has been released out into the market already. That's why we're having these very massive buys today morning, trying to fill up the volume and balance up the imbalances left on Wednesday. So guys, on Wednesday, on Friday, this is our true day open. Our true day open. We see the accumulation. This is the Asian range. Just above the open price, right? We see the manipulation trading down the open price. We see the manipulation trading down the open price. Then, guys, we see the distribution above the open price. We see the accumulation just around the open price. We see the manipulation trading down the open price. Then we see the distribution just above the open price. So, guys, we see how it played out from Monday Tuesday, Wednesday, Thursday, Friday of the previous week, accumulation around the open price, manipulation below the open price, and distribution. Now, you might be wondering, how am I supposed to cash this trade? We have this bearish, bullish order block. This bearish candle right here is the bullish order block. Now, you might be wondering, how am I supposed to know we are buying? We have seen price has filled up the objective of the previous week, which was targeting that low right here. So the objective of the previous week has been done. Objective of the previous week has been what? Done. What are we looking at right now? We're looking at price going back and filling up the what imbalance it has left all over the market. Now we see this small movement up right here. We see this high was taken out. This high was taken out, right? And what was the cause? What facilitates that movement? It was this bearish candle. So if I was to take on this trade, I'll just use this bearish order block. Now I will just go and use my 50. I like the 50%. I like price testing the mean threshold of every other block. That will give me a little bit of refinement. If I don't want to go and start shifting time frame, I just go into the other block and use the 50%, and we can see how price filled it perfectly well. Now you had entered at this zone, the 50%, right? You had entered at the 50%. Where is your stop loss? Just by the low. We can see that price already dragged below. You see this bullish candle traded below the bearish candle, taking out every single bit of supply in that candle. The bullish candle traded below the bearish candle, taking out every single bit of supply we have in that candle. So supply was perfectly taken out. So that other block, it's super clean, and you can see the bearish candle is big enough. We have enough body candle to work with. So I'm just going to look at the 50% of that bearish candle. Because it was that bearish candle that facilitates the movement. We have a sell to buy. So we know the banks are on a drawdown on that bearish candle. What will I put my stop loss? Just by the low of the bearish candle, because supply has actually been taken out. Supply has actually what? Be taken off. I don't want to be too tight. I want to give my trade some avenue to breathe. I'll put it below the bullish candle. If this other block is valid, price has no business coming down below the bullish candle. What's going to happen? I would just swing it all the way to fill up the imbalance. So if I taken this trade on a Friday, which I did, I took these buys on Friday, right? I will just target where? Filling up by taking out this high. A classic market maker buy model. So guys, I've just shown you how to use the open price to get entries from Mondays to Friday of the previous week as a case study. I also showed you guys how I got this buy entry. It's currently on my channel. I took this buy entry. We see how this, we saw a change in character right here, this bullish candle. And why did I took this trade? I saw some bullish strength, coming in, and I know the objective for the week has already been done by sweeping that low. So I know that anything below the low, smart money accumulates their buy orders below that low. This is the low right here. I know that we already have a stop hunt at this point. All the traders that were buying were stop out at this point. So we have a stops run at this point. So I'm going to put these stops rated. Stops rated right? And the objective of that previous week has been done. What next? Market, they will have to fill up the imbalance they left all over the market. So when I saw this shift right here, I decided to take up this buy. And I know below this low, smart money is accumulating by orders. And we saw the massive, huge momentum, the way they push price up today, Monday. And from what we can see, this is a classic market maker buy model. Where's the target? This swing high. So the target will be this swing high for your take profit. And that would have been a very massive risk to reward trade. So guys, this is a short video to just show you how to use your your open price and how to get your trade easily. So this was a massive return. We see how price, if you're taking this trade, you just have a 7 pip stop loss and targeting over 200 plus people take profit. And we see the price has already done a massive move already. Price has done quite 100 and something people already, 192 people already, which is a very massive return. So we are seeing this high as our next target from smart money, sweeping out this high, then negotiating on the way to get a possible good premium pricing to go take out sell stop. So guys, that's there's a short video I decided to make for you guys on how to take your trades just using the midnight open, the power of 3. It's really beautiful. Give me a thumbs up. My channel link will just be by the description box. I am not your ideal YouTube tutor, guys, so I'm just doing this to help on the 2 persons who don't have an idea on how to use the open price as a power of 3 means to get your trade set up. Now we can see this Monday. We can see the Sunday open price. We can see the Monday open price. We see where price started, today. We see how price rallied below the open price. Very clean. Rally below the open price. Just rally below the open price. And we see how it shoots up and started buying. Sunday open price traded below Sunday open price. Just how many pip? Classic 15 to 20 pip. I just think so. Exactly 15 pip and shoot up. So you have a market maker buy model. So guys, this is how to use your open price as a way to get safe, easy 20-30 pips on a daily basis with very little short stop loss. I hope this helps somebody. Thank you for watching and have a great evening. Bye.